Welcome to Money Matters. My name is Nev, broadcasting live only on OneDealAway.com, straight out of Providence, Rhode Island. And boy, do we have an exciting show for you today. We're going to be covering all kinds of cool things, including talking about what the impact was or has been on Facebook when all of the companies decided to start pulling advertising dollars away from Facebook. We're also going to look into what does it mean for economy when we lose so many jobs, not as many are created, and what can we expect that the future is going to look like. Now, yesterday we talked a little bit about the crisis or collapse 2.0, and today we have some more news about the companies and corporations that are filing for bankruptcies. That is exactly what we're going to cover here today. Of course, we're going to look at the prices of the markets so that we understand what's been going on and what can we expect the future is going to bring. As you can see, we have a full show of all kinds of information and news. So let's do this. All right, y'all, and good morning. I hope you're as excited as I am to go in and jump into what's going on in the news when it comes to our money, our economy, our businesses, and a host of other things that impact just about everybody in the world. And today we have quite a bit of information and news to sort of talk about and cover. And one of the things that I want to talk about, hold on, I just realized that there's something wrong with the world. Okay, there's nothing wrong with the world, y'all. But there is something that I just needed to fix on the page. Hopefully, we can see this now. So let's jump into it and see what's going on in the world of Zucky. So, as you can see, that there's even more companies that are joining the sort of a boycott of what to expect and what uh, um, when it comes to Facebook, of course, to talk about, hey, we no longer want to advertise with Facebook. And as you know, when we first covered first part of the story, when we talked about this stuff, Facebook was basically saying, we're not doing anything. However, now we are seeing that there is stuff that they're saying, maybe we should reconsider and start doing some stuff. So Facebook share price dropped more than 8% at the close of Friday trading. Coca-Cola is the latest brand to back the Stop the Hate for Profit, and they said they will halt its social media ads for 30 days, and they were rethinking their policies. Now, what does that mean for us? Well, we don't quite know exactly. We know that the month of July, which, by the way, can you believe it, starts tomorrow. Today is officially the end of half of a year. 50% of the year is gone and done with today. And so it'll be an interesting next half for sure. What we have seen is that they're basically saying that late on Friday, Zuckerberg announced that the company would start to label newsworthy posts from politicians that break the rules. So let's pause over here. This is kind of how it works. Welcome to the world where rich and famous, too big to fail, too big to jail, get to do, say, and behave however they want. They get labeled or, have to pay a small fine or get helped by the government and everybody else. And yet, the small guy or gal for that matter, or a trans person for that matter too, if they're not big enough, then, when they do something they're not supposed to, they get banned, they get fined, they get jailed. Nobody comes to help them. And if they need to borrow, unlike too big to fail, too big to jail that gets loans for zero or negative interest, well, we pay 20, 30, 40, 50% or 2,000 if they have to use one of those check cashing places on the corner somewhere. So that is the reality and the truth of what's going on in the world. And I don't think that that's in the United States alone. I think that that's frankly happening all over the world. And that's the new normal that we're all expected to live with. But hey, let's continue to talk about what will Facebook do to get its advertising dollars back. Facebook ads team was trying to place fleeting advertisers by saying that the company was serious about addressing their concerns. Advertising dollars account for almost 100% of Facebook's revenue, with the firm pulling a whopping $17.4 billion in ad sales in the first 3 months of this year. Of course, the folks that are organizing the whole thing, the NAACP, Color for Change, Anti-Defamation League, and a few others, are basically saying, we've seen you say something like that in the past. We don't trust you anymore. I don't think so. Because, by the way, the addition to the Coca-Cola, North Face, Verizon, REI, Ben& Jerry's, and all of that, Unilever joined, as well as the Hershey. So there you go. Even the chocolate people are saying, I don't think so, Facebook. So another article says Facebook sees $60 billion in market value erased in just 2 days as advertisers like Starbucks and Pepsi halt social media spending. Yeah, Zucky is a bit confused as to what's going on. But, here's one of those things that I think teaches us an important lesson, which is why I want to use it. And that, we can vote with our dollars. Big companies can do it. We absolutely can do it as well. The problem is that, these large spending dollars account for maybe 8% of the total ad revenue for Facebook. The rest of it are small and medium sized businesses. And the question is, will they join the party? We just don't know that yet. I don't have that information. I am going to bet that vast majority, especially of the small advertisers, will probably stay and basically look at this as an opportunity to get more for less. So there's that piece to kind of keep in mind. And again, it's going to be an interesting component, and it's going to be an interesting thing to consider. What will all these companies do when month of July expires? Will they go back in? Will they stop forever? And what will the impact be on their products and services at the end of July? None of us know that, and it's going to be very interesting times ahead. Now, talking about end of July, as I have mentioned, today is it Tuesday? It is Tuesday, June 30th, 2020. And what that means is that we are a month away from many of the stimulus expiring for businesses, for individuals. Things like $600 per week extra in unemployment. That is set to expire at the end of July. And we do have news for that. There's also going to be additional piece like forbearance stuff, the eviction stuff, all kinds of stuff that is going to be expiring in less than a month. And I don't have the news report over here, but we talked about it, so let's cover it as well. Is that while you might think that the Congress is going to jump in, and we're going to talk about it a little bit more, while that is absolutely possible, we don't, you don't expect much of anything going on because, well, 4th of July is this week, which means folks are going to take off early, probably as early as tomorrow, maybe Thursday, and not be back until 6th or 7th. However, there's an interesting piece that is also happening when it comes to Congress. Remember, I told you they like their recess. They are like 3-year-olds. They need plenty of breaks and juice boxes in order to make do and make tough decisions in the world, which is probably bail out the big companies and big guys and screw everybody else. Sorry for my S word, but that's just kind of how it is, right? So they're going to go in recess until July 17th. And at that point, they will start discussing. Now, they will go again in recess, I want to say in early August, up until early September. So not much work is going to be done in Congress over the next 2 weeks, but the pandemic will continue on. We will see all kinds of sort of stops and closures, increase in numbers, decrease in numbers. It is going to be a wild roller coaster ride, as we can see already, and it's not going to stop anytime soon. So what does that mean? Well, they're sort of stuck back and forth arguing of what is going to happen. Do we pay them $600 to not work, or do we pay them $600 to work? Do we send another $1,200 check, or do we send nothing? Do we change who gets what, or do we expand or shrink? Do we basically, one of the programs that I was reading about basically said, well, we're not going to pay anybody anything. We're just going to get people vouchers to travel. Yeah, it's like getting coupons from the government. Isn't that exciting? How lovely. Yes, I can't afford rent. I can't afford to eat. But please let me get on the plane and travel so because I just got a voucher. This is crazy times, y'all. We don't know what exactly is going to look like. One thing we know for sure is this $600 federal bump in unemployment benefit will end a week earlier than expected for millions of Americans. Ouch. So we have less than a month, as you can see over here. So let's take a look at the article. Now, they're saying that basically that it's supposed to end before July 31st, right? That's the month coming tomorrow. But given state unemployment systems set their weekly end dates on either Saturday or Sunday, the government measures that's financially cushioning people is expected to expire before the end of next month. The $600 extra in weekly pay is going to end for all states except New York Saturday, July 25th, and New York is going to end on Sunday, July 26th. So it is going to end way sooner than we originally thought, that you originally might have planned. Now, that pay cut would range from around 50% to 75% overnight. That is huge. That is absolutely huge. And it is going to be a real shock to people, especially in states like Arizona, where the maximum benefit is $240 a week. Now, I don't know about you. I used to live in Arizona. There's plenty of things that I like about it. There's plenty of things that I could live without, like the 100 and something degree weather. And don't you dare say, but it's a hot heat or it's a dry heat. Yeah, it's like sticking your head in the oven for 25 minutes every time you step outside. It is not pleasant. I can tell you and assure you of that stuff. But this is very painful. $240 a week. That counts to what? What? $1,000, not even for a month. Nobody can live off of that. I mean, I don't know. Maybe I'm wrong. Let me know in the comments. Let me know in the chat. Which, by the way, talk about the chat. Welcome to everybody who is on onedealaway.com right now watching this live. Put stuff into the chat and we're going to discuss and cover as soon as we are done covering the news. For all of you watching a replay on YouTube or any other channel, do me a favor. Hit the subscribe, hit the like button, and do hit the bell so you get notified every day when new video drops, because we do this show every single day at 7 a.m. Eastern Time. Let's continue. Roughly 33 million people are collecting the benefits or waiting for their application to be processed. Last year, the average weekly benefit to a jobless worker was $378. So you remove the $600, and yeah, a lot of people will suffer. Now, Congress is barely divided on extending unemployment benefit. Democrats are seeking to extend the $600 federal boost through January of next year, but Republicans argue it disincentivizes work since it allows people to earn more from the government than they did at their old jobs. So this is going to be an interesting piece and something that I have been talking about quite a bit, that it's a problem that when people get excuse me, when people get paid more to not work than to work, they don't want to work. Now, I also understand the conundrum that, $240 or $370 a week is not going to cover much of anything. I mean, just the groceries alone. When you go to the grocery store, if you go and buy food, that $100, I mean, boom, it disappears like there's nothing. And you walk out with what? Two tiny little bags of groceries that might last you a week, maybe 10 days if you really stretch it. So it's not really sustainable to kind of go through it. But again, we'll see what they'll end up doing. And my fear, as was from the beginning when I started talking about this stuff, is that they will act a bit too late. So, folks, if you are on unemployment, because I don't know who's watching this stuff, it might be prudent to put away and save up some of this money if you can. Do whatever you can to take this extra $600 over the next couple of weeks that we have left, put it aside, put it in a savings. Try to do your best. If you haven't been doing it since you've been laid off, try to do your best to put a little bit of money aside, because if they show up back after recess, which they're going to take, they could, I don't know how to say this, but it sounds heartless, but they could care less about you and I. I mean, let's be honest. Congress is filled with millionaires and billionaires, and those people are detached, completely detached from what life looks like for a normal human, as I like to call a mere mortal that is just trying to make do with a job or side jobs, or trying to do all kinds of different things to make do and survive. And we've talked about all of the stuff, how people have multiple jobs and are still having to tap into their credit in order to make do. So if you can at all, put some money aside so that while they're deciding if that thing doesn't roll out until, August 10th or whatever it is that they go for recess number 2 for summer vacation, because all of us get summer vacation for a whole month, right? Don't we? Right? I mean, you don't get that? No. No, nobody gives you and pays you to go on recess for 2 months in the summer and enjoy the beaches with the government sponsored voucher for travel, do you? No, I didn't think so. Yeah, we're lucky if we get 7 to 10 days through jobs, and you're lucky if you do have a job. So, talking about the jobs and labor and all of that stuff. But before we go that, so save up some money so that in case it comes in a bit late and there's a week or two gap, that you can cover your expenses and at least sort of bridge yourself over before they decide what the heck they're going to do. All right. Talking about the labor and the market and the work and stuff, a key labor market ratio has tumbled near record lows, and Deutsche Bank top economist says that the U.S. has to create a whopping 30 million jobs to reach a new all-time high. Now, I don't know if we're shooting for all-time high. I think we're just trying to get something, anything whatsoever. In April, the employment to population ratio, the percentage of those above age 16 who currently have a job, fell to an all-time low of 51.3%. In May, it ticked up slightly, but it was still 52.8%, meaning that only half of working age Americans currently have a job. This is scary, y'all. I don't know how you feel about it, but that's petrifying to me. To get the employment to population ratio back to where it was at its peak in 2020 years ago, we need to create 30 million jobs. The employment to population ratio was steadily gaining towards the all-time high of 64.7% in April in 2000. In January, before the coronavirus pandemic hit the US, the key ratio was 61.2%. So even then, it wasn't like perfect, but I mean, it beat 50%. Even at the current rate that the U.S. economy is adding back jobs, it will take some time to return to the 2000 high. Yeah, I think it might take a decade or so. I could be wrong, and we might never reach this ever again, especially if we start switching to the AIs, computers, and robots doing vast majority of our jobs. But again, we'll see how it looks like. In May, the labor market rebounded, adding 2.5 million jobs. On Thursday, the Labor Department will report the June non-farm payroll reports, which economists expect will show U.S. economy added 3 million jobs in the month, reflecting an unemployment rate of around 12%. There will be a roughly 50 million job hole from the coronavirus pandemic that will need to be filled just to return to the pre-pandemic levels. Yeah, so scary, 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 y'all. And between what's going on with the unemployment claim, between everything expiring in July, between the uncertainty of the economy, needing to create all these jobs, and where the heck are you going to create them? Because all of the companies are cutting. All of the companies are closing, and they are cutting. They are not creating. And if you don't believe me, you should watch previous episodes on the YouTube channel, Money Matters, and they're all archived right in there. And again, if you are watching this on YouTube, do me a favor, hit the like button and subscribe. help the brother out for delivering news absolutely free. And we are still committed to run the channel ad free for as long as we absolutely can. So do me a favor and help me out. Let's at least get more people in since we're running an ad free account so you don't have to get interrupted show. So talking about the trouble, and yesterday we talked about the collapse and the trouble, and today I want to share with you some of the stories that I was able to find. Well, I wasn't searching for them; they honestly popped up on my screen. That I said, talk about perfect timing, and that is how companies are struggling. For example, Under Armour, they are struggling. They have been struggling for a little while, and now they're struggling even more. What has happened is that they are in a lot of trouble. Nike and Adidas are also posting slumping sales amid the impact of coronavirus pandemic. However, Under Armour was already sputtering well before the outbreak, and the outbreak is not helping at all. Giant said in May it was working to extend payment terms for all athletes as a measure to cut costs. The company announced it is terminating its partnership with UCLA, which is a $200 million deal signed in 2016 and meant to last 15 years. Well, it lasted what? 4 years, if that? In a statement to Fox Business, the company cited not receiving marketing benefits for all extended time period that the company had paid for. So there you go. They're starting to end contracts now, but it doesn't end there. Let's take a look at another article that talks about what is going on in the world of business and why I am very seriously concerned about the banking collapse and the collapse in real estate, especially in a commercial real estate. So let's talk about it. More than 4,300 stores are closing in 2020 as the retail apocalypse drags on. Here is the full list. Ooh, this is going to be exciting. Are you excited to find out the full list of folks? We're not going to read all of the stuff, but we're going to cover quite a bit of it. Retailers are expected to close more than 4,600 stores this year, following record high rates of closing last year. More than 9,300 stores closing were announced in the U.S. in 2019, smashing the previous record of 8,000 in 2017. Pause. So now we have a challenge, right? We in 2017 we closed 8,000 stores. In 2019 we closed 9,300 stores, and now I think that there's an expectation to close even more, and that is 12,000 major chain stores could close in 2020. As you can see, we're rapidly and exponentially growing in the amount of stores that are closing when it comes to retail. So so far we have a confirmation of 4,600 stores scheduled for 2020. So here we go. Pier 1, 450 stores. GameStop, 320 stores. Sign Jewelry, 300 stores, like K Jewelers. Remember those commercials? I don't know if they're still running. Papyrus, 254 stores. They're in all of these malls that are not coming back. GNC, 248 stores. Victoria's Secret, 238 stores. We talked about them yesterday. Remember the pretty pink bag? Gap, 230 stores. Tuesday morning, it's closing, filing for bankruptcy, planned to close 230 of its roughly 700 stores. Walgreens, 200 stores. Chico's, 200 stores. Wilson's Leather and GH Bass, 199 stores. Goodbye Outlet Malls. Destination Maternity, 830. Forever 21, 178 stores. JCPenney, 155 stores. Models, 153 stores. AC Moore, 145 stores. Macy's, 125 stores. Artman Furniture, 125 stores. Bose, 119 stores. Guests, 100 stores. Microsoft, 83 stores. Olympia Sports, 76 stores. Sears, 51 stores. Earth Fare, 50 stores, grocery chain. Bath and Body Works, 50 stores. Kmart, 45 stores. Bed Bath & Beyond, 44 stores. Lucky's Market, 32 stores. Express, 31. Neiman Marcus, 20 stores. Nordstrom, 19 stores. Hallmark, 16 stores. Walmart, three stores. As you can see, this is incredibly depressing. And you can see that it's anywhere from food chains to pharmacies to clothing outfitters to furniture to tech. I mean, this thing is not discriminating at all, and it's going to be hitting everything and everyone. And so when we talk about these jobs that are coming back, they're not. They're not coming back. And yet, what is happening in a market? Hey, we haven't looked at that, but let's take a look. Oh boy, market is up. Dow Jones, one day it is up 2.32%. In 5 days, we're kind of down. And 1 month, we've been down. 6 months, we still haven't reached the top. And remember, I've been talking about we're going to go down, we're going to go up. It is going to start slowing down, and we will see eventually the sort of trickle down coming in. And here we go. That's kind of where we are. But let's take a look at S&P. Maybe the story is different. One day, we are up 1.5%. 5 days down, month down, but on the 6 months, even though we're still down, you see a very similar story. We dumped down in March, climbed on up with June 8 being the peak, and have been starting to slowly go down. Now, what is going on with NASDAQ? Well, NASDAQ is up 1.2% in a day. It is down in 5 days. It is up in 1 month. And in 6 months, of course, we've beat the February high. But as you can see, it is starting to slow down. This is why I love charts, because they do give us a very good story of what's going on. Now, let's take a look at what's going on with Bitcoin. And as you can see, Bitcoin has actually gone from the 90, we talked about it yesterday, day before yesterday. So we were at 90.90, I want to say, kind of climbed up. As you can see, we've reached what is this high of like 2,200 something, kind of came back down. Overall, not much going on. In 1 month, we are down. 6 months, we are not necessarily up. We can see a very similar pattern coming in. So part of what I am seeing is that while Bitcoin on the long term is overperforming just about every asset out there, short term in the 6 months period, it looks very similar to S&P and Dow Jones Industrial. Let's take a look at a gold, because it is one of the other assets that we should be considering and paying attention to. In one day, as you can see, it's a lot of side action, although we have been kind of hitting this 1769 as a sort of the support level, as you can see. If we look at the 5 day, sideways action. 1 month, you can see that we've actually come up since the 1684. In what was this time? This was in June 5th. And in a 6 month period, we are definitely climbing up steadily. So gold seems to be performing rather well and should most likely continue to do the same thing. We're expecting the new key levels of over 1800. I want to say about 1828 to 1840. And if that happens, we can expect it to go up to 1900s, potentially 2000 or more. So that's sort of what's happening with the gold. If we can't sustain this 1690 whatever level, then we might go down to the back to the low 700s, high 1600s. So 1670 to 1720 plus minus, right? So that's kind of what we expect what could happen with gold in a relatively speaking short term, month, 2 months, something like that. So nothing too wild and crazy going on over there. And to wrap things up, we're going to take a quick look at this particular article that talks about the historically expensive S&P 500 could be seeing a loss of reopening optimism, Bank of America says. Since we talked about the markets, let's cover sort of what's going on with S&P 500 and kind of what's been going on. The S&P 500 companies benefiting from stay-at-home orders and telecommuting vastly outperformed the market through March. Names like Zoom, FedEx, and AT&T at one point commanded a 40% premium, and companies particularly damaged by lockdowns such as Gap and Carnival as they were compared to each other, right? The premium has since shrunk to largely split the difference between the pre-pandemic discount and the March peak. We think the market could be pausing just like the Texas and other markets with the reopening are kind of pausing. And you can kind of see the chart over here where we got the 40% premium here in the market, and we're sort of like coming back down. And this is where the second wave is hitting. So we'll see how the behavior is going to be. The S&P 500 is statistically expensive by nearly all 18 metrics, Bank of America said, with just its equity risk premium and free cash flow readings showing the market is inexpensive. The S&P 500 dividends sit at a roughly 3 times the yield on a 10-year Treasury note, nearing a 70-year record, which basically says that it's making it attractive to investors to put in and collect a healthy yield. The Bank of America found healthcare stocks to provide the best quantitative positioning. Tech giants slid to a second place. So they're basically saying that if you're looking to invest within S&P because of the dividends, because of the yield, because of all of the stuff, here's where we're looking and saying, here's where it kind of makes sense. Healthcare first, tech second. Then they also found opportunities for positive earnings revisioning and momentum in semiconductor stocks, food products, and media services. And then energy stocks ranked last in the bank's framework. So that's an interesting thing. And I don't know how many people are jumping in it. But one thing we do know is that people are on Robinhood. And I do have yet another news from Robinhood. Well, it's not from Robinhood, it's from Business Insider, but it is about Robinhood. Robinhood is making more money per trade than rival brokerages as millennials rush into day trading. This is interesting. And the question you might have, I already hear some of my students and followers saying, wait a minute, how do they make money if they are free? Well, they're free to you and I, but they make money by selling our information to the market, y'all. To the market. So there you go. They're not free. Nothing in life is perfectly free. Robinhood made more from individual first quarter trades than its legacy rival, according to Piper Sandler Research. Brokerage made 0.0024 for every stock trade, beating out TD Ameritrade, Charles Schwab, and E-Trade. Equities trade netted Robinhood more than 31 million, second to TD Ameritrade nearly 73 million windfall. Charles Schwab and E-Trade brought in 22 and 19 respectively. Interesting. Now, this is an interesting piece to kind of pay attention to and say, well, wait a minute. They are actually making money from people trading. Of course they are. Of course they are. It is not free. This is not a nonprofit. It's very much for-profit business. And they're saying that they are able to charge a higher rate due to greater profitability in its order flow. Okay. So you can see that a relatively young firm receives a fixed rate per spread while other brokerages charge a fixed per share rate. And you can kind of see where the equity volume is, right? So you can see that clearly TD Ameritrade is winning. And then order rate. And you can see that Robinhood is winning when it comes to this stuff. So, of course, they're able to earn way more. The brokerage sources some of their revenue by sending stock orders to market makers. By charging a higher rate than rivals for each of its equity trades, Robinhood was able to bring in more than Schwab and E-Trade despite handling a smaller volume of transaction. So one of the ways that they do it is because they charge market makers to basically fulfill the orders, and they are basically going in and making all of this money from contracts. And of course, they do sell and front run your trades. You probably didn't know that, and that's how they make quite a bit of money as well. As institutional investors sat out much of the market recent run-up out of fear of a second slump, retail traders piled into airline, cruise, and retail stocks as hopes of smooth economic reopening fueled a broad rally. Retail investors garnered more returns this year than hedge funds and mutual funds managers. Congratulations to all of the users of Robinhood. You are smarter than the average fund manager and hedge fund as well. Now, the interesting piece comes in for these guys. How will they continue to get people to actually give them money and pay hefty fees, because one of the things that the hedge funds they will charge you 2% on the front end for operation, and then 20% for all of the gains that you might receive. And then mutual funds, of course, also charge fees regardless of whether you make or lose money. It's going to be very hard to keep these folks in business when you can just go into Robinhood, click a few buttons, and boom, you can win. Users ratched up volatility for banker firms including JCPenney and Hertz, hoping for a miraculous rebound from insolvency. This also proves that when you file for bankruptcy, you potentially could make even more money. So, congratulations to all of the businesses that are going to be closing stores, eliminating jobs, and filing for bankruptcy, because your stock might just go through the roof. So, that's it, y'all. Thank you for watching. Make sure you show up tomorrow only on onedealaway.com/live. And again, if you're watching this on YouTube, do me a favor. Hit the subscribe, hit the like, do share it, do hit the bell, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.